Today, we are taking a closer look at an important discussion surrounding Iraq's financial reforms, the banking sector, illicit cash holdings, and the ongoing debate about currency modernization. While there has been considerable commentary surrounding these topics, it is essential to separate official policy from speculation and focus on what these developments could realistically mean for Iraq's economy and for those who follow the Iraqi Dinar. The latest discussion centers on the idea that individuals holding illicit or laundered funds have significant incentives to remain outside Iraq's formal banking system. The reasoning is relatively straightforward. Once large amounts of physical cash are deposited into regulated financial institutions, banks are required to perform customer due diligence and comply with anti-money laundering regulations. Financial institutions may ask questions regarding the origin of funds, documentation supporting ownership, and the legitimacy of the transactions involved. These requirements are not unique to Iraq. They are standard practices followed by banks across the world as part of international financial compliance. For many years, Iraq has been working to strengthen its financial oversight framework. The Central Bank of Iraq, together with government institutions, has continued implementing reforms aimed at improving transparency, enhancing banking supervision, modernizing payment systems, and reducing opportunities for financial crimes. These reforms are intended to strengthen confidence in Iraq's banking sector while aligning the country more closely with international financial standards. When discussing large quantities of cash circulating outside the banking system, it is important to understand that not every cash holder is involved in illegal activity. Iraq remains a cash-based economy in many regions. Some individuals and businesses simply prefer holding physical currency because of limited banking access, historical distrust of financial institutions, or cultural preferences. However, authorities remain particularly concerned about cash connected to corruption, tax evasion, organized crime, terrorism financing, and money laundering. The discussion also references repeated warnings regarding the possible deletion of zeros from the Iraqi currency. This topic has been debated in Iraq for many years and has often generated confusion among observers. It is important to clarify that deleting zeros generally refers to a redenomination process rather than automatically increasing the purchasing power of a currency. In many countries, redenomination involves replacing old banknotes with new ones at a fixed conversion ratio to simplify accounting and reduce the use of large numerical values in daily transactions. A redenomination should not automatically be interpreted as a currency revaluation. These are two very different economic concepts. A revaluation changes the official exchange rate of a currency under a managed exchange rate system, while a redenomination changes the face value of banknotes without necessarily altering their real purchasing power. Understanding this distinction is essential because these terms are frequently confused in public discussions. The commentary also mentions the possibility of adjustments to the real effective exchange rate, commonly known as the RER. The RER is an economic indicator used by economists and central banks to evaluate a country's currency value relative to the currencies of its major trading partners after accounting for inflation differences. It helps policymakers assess whether a currency appears relatively overvalued or undervalued from a competitiveness standpoint. An adjustment in the RER does not necessarily mean there will be an immediate change in the official exchange rate experienced by consumers or investors. Instead, movements in the RER often reflect changes in inflation, productivity, trade balances, and exchange rates over time. Therefore, references to the RER should be interpreted carefully and should not automatically be viewed as evidence that an official currency revaluation is imminent. One of the most interesting arguments presented in this discussion is the idea that financial reforms could encourage legitimate cash holders to return their money to the banking system. From an economic perspective, there is logic behind this observation. Governments around the world generally prefer money to circulate through regulated financial institutions rather than remaining stored outside the banking system. When funds enter commercial banks, those institutions gain additional liquidity that can support lending, business investment, infrastructure development, and economic expansion. Deposited money can finance mortgages, small businesses, agricultural projects, manufacturing, and private sector growth. In contrast, cash hidden outside the banking system contributes very little to productive economic activity. For Iraq, increasing financial inclusion remains one of the government's long-term priorities. Authorities have introduced electronic payment systems, encouraged digital banking, promoted salary payments through bank accounts, and expanded electronic financial services. These initiatives are designed to reduce dependence on physical cash while improving transparency throughout the economy. If legitimate businesses and households become more comfortable using banks, the financial sector becomes stronger. Stronger banks generally improve credit availability, increase investor confidence, and contribute to broader economic stability. These developments could support Iraq's long-term modernization efforts, even if they do not immediately affect the exchange rate of the Iraqi dinar. The commentary further suggests that individuals holding illicit cash may face increasing pressure if financial regulations become stricter. This reflects a broader international trend rather than something unique to Iraq. Countries participating in global financial systems are expected to enforce anti-money laundering standards and cooperate with international organizations in combating financial crimes. As compliance standards improve, individuals who cannot explain the legitimate origin of substantial cash holdings may encounter greater difficulties when attempting to introduce those funds into regulated financial institutions. This represents part of the global effort to reduce corruption and strengthen financial integrity. However, it is equally important to avoid assuming that every future policy change will instantly force all hidden cash into banks or permanently eliminate informal financial activity. Economic transitions are usually gradual. Behavioral changes among businesses and households often require years rather than weeks or months. Public confidence, regulatory consistency, and institutional capacity all play major roles in determining whether financial reforms succeed. Another statement suggests that people holding billions of dinars obtained through illicit means may fear future policy changes. While that concern may exist for individuals engaged in illegal financial activities, it should not be interpreted as affecting ordinary Iraqi citizens conducting legitimate business or maintaining lawful savings. Law-abiding individuals who can document the legitimate origin of their income generally face far fewer challenges within regulated banking systems. Modern banking reforms are designed primarily to identify suspicious transactions rather than discourage ordinary economic participation. For Iraqi dinar followers around the world, the broader takeaway is that banking reform and currency reform are related but separate processes. Improvements in financial transparency, stronger regulation, digital payments, and anti-money laundering enforcement help create a healthier financial environment. They strengthen the institutional foundation necessary for long-term economic development. Nevertheless, these reforms alone do not guarantee changes in the official exchange rate or the international value of the Iraqi dinar. Exchange rate decisions remain the responsibility of Iraqi monetary authorities and are influenced by numerous economic variables, including inflation, foreign exchange reserves, fiscal policy, oil revenues, economic diversification, and broader macroeconomic conditions. In the short term, continued financial reforms may increase confidence in Iraq's banking sector. Businesses could benefit from more efficient payment systems, improved access to financial services, and greater transparency in commercial transactions. International investors often view stronger banking regulation as a positive sign because it reduces financial risks and demonstrates institutional maturity. These developments may also improve Iraq's relationships with international financial organizations and foreign investment partners. Countries seeking long-term investment generally benefit from demonstrating that their banking systems comply with recognized international standards. Over the longer term, sustained banking modernization could contribute to stronger economic growth if accompanied by broader structural reforms. Diversifying beyond oil, supporting private sector development, expanding manufacturing, improving infrastructure, and encouraging entrepreneurship remain important objectives for Iraq's future. A stronger banking sector supports these goals by mobilizing domestic savings, facilitating productive investment, and improving capital allocation throughout the economy. As confidence grows, households may increasingly choose regulated financial products over holding physical cash, creating additional resources for economic development. At the same time, observers should remain cautious regarding claims that assign specific deadlines or guaranteed outcomes to complex monetary reforms. Currency policy is one of the most carefully managed areas of economic governance. Decisions involving redenomination, exchange rates, or major monetary restructuring typically require extensive planning, legal preparation, institutional coordination, and clear public communication. Responsible analysis therefore requires distinguishing between official announcements and market speculation. While discussions surrounding the Iraqi dinar often generate considerable interest, it remains essential to evaluate information through credible sources and official statements from Iraqi authorities. Ultimately, the broader message from today's discussion is that Iraq continues pursuing financial modernization by strengthening banking oversight, improving transparency, encouraging greater participation in the formal financial system, and reducing opportunities for illicit financial activity. These reforms are important because they help build a more resilient economy capable of attracting investment, supporting sustainable growth, and increasing confidence in national financial institutions. For Iraqi dinar followers, these developments are certainly worth monitoring because financial sector improvements contribute to the overall economic environment in which monetary policy operates. However, it is equally important to maintain realistic expectations and recognize that meaningful economic transformation usually occurs through a series of gradual reforms rather than one single event. As Iraq continues implementing modernization initiatives, observers should pay close attention to official central bank announcements, government economic policies, banking sector reforms, inflation trends, foreign exchange reserves, fiscal performance, and progress in diversifying the economy. These indicators together provide a more complete picture of Iraq's financial direction than any single rumor or speculative claim.